couple of sessions. I mean, one thing is absolutely clear. The market has become lighter. A lot of the froth is off. So that is what is perhaps going for the market. In terms of compelling reasons to jump in and buy the market overall, that may still be some time away, but it's become lighter, and sometimes those things also matter. The Bank Nifty, of course, is doing better than the Nifty. As we've been pointing out, the last 2 days, Nifty Bank has done better. We'll come back to more specific stocks, etc. in a bit from now, but we're at almost 17,400. Ashwini Agarwal is founder and partner at Demeter Advisors. He's a market master of the day. Ashwini, great to have you with us here. Thank you very much. Just on that near-term market direction question, Ashwini, what do you make of it? How much of the froth is out of the system? And, does it provide grounds for the markets to see some pullbacks? What's your sense?
So, Prashant, I'm not a great one to be able to predict short-term moves at all. But like you just said, that a lot of the positioning has become very light, and the market's seen a pretty steep correction over the last 7-8 days. In the near term, can we see a pop? Possibly, yes. But I think, from a more medium-term perspective, if I were to zoom out and talk about this year on the whole, it will continue to be a very challenging year because of rising rates and slower growth. And those two factors will continue to weigh on the market sentiment. I'm not suggesting that there's a massive amount of downside from here, as the positioning is quite light at these levels. But I do think that large increases from here will attract more profit taking. That's what I think.
Okay. Well, Ashwini, good morning. The big theme that's playing out is this consumption slowdown, right? I want to understand what are the ramifications that this would have, both in terms of growth, earnings. Are we expecting to see more earnings downgrades from here? Because Q3 wasn't quite impressive. What is your own expectation of which are the pockets that could get hit the hardest?
Sonia, great question. Obviously, like you said, the December quarter was fairly disappointing. And the way I'm thinking about this is that we have challenges at hand, which include higher rates, and that translates into probably higher mortgage payments or higher installments on loans for a lot of the borrowers. And at the same time, what we are starting to see is extremely hot weather. And if this will impact the harvest and it will impact the outlook for the agricultural output for the next 1 year is something that remains to be seen. But we are experiencing extreme weather in several parts of the world, including Europe and the US. And we are seeing that in India as well. So my worry is that in addition to higher rates, which are obviously impacting consumer demand, as was visible in the December quarter, we've got other factors to contend with. So my sense is that, we need to be cautious. And I'm cautious not just on the staples, which have taken the brunt of the slowdown in the December quarter, but even on the discretionary spend, because I think higher rates is going to eat into some of the discretionary spends as well. So, whether it's automobiles, whether it's real estate, in some sense, these are all rate sensitives, and I would be careful about them.
All right. Hi, Ashwini. Just hold on to that thought. We have Bajaj Auto's numbers that are coming up for you on the screen, and actually they're as bad as expected. Expecting a total sales degrowth of close to 10%. It's coming a little bit worse. There's 11% degrowth out there. Domestic sales continue to see some growth. The problem is in exports, and that's played out yet again. So we'll get the management in just a bit, and Sonia as well will give us a quick analysis on that front. But exports are down by 38% on pain being seen in the exports market. Let's see what the management can get for, but disappointing, a little bit more disappointing than what you're working with.
Oh, absolutely. And 1.27 lakhs is the export number. Now, on an average, they would do about 1.4 to 1.5 lakhs in the preceding months, ranging from August to about November. It's only in the month of January that we had 1.12 lakhs, and now in February 1.27 lakhs. So there's a clear slowdown visible in the export market, and the management has told us several times that things have been looking weak for the last many months. That's the export number. As you can see, the preceding months between August and November rather, 1.4 to 1.5 lakhs was an average, and now that has slowed down in the last 3 months. Ashwini, this is the problem, right? What's happening with some of these export markets like Nigeria, Egypt, the currency devaluation there. There's a massive slowdown in Europe that's still underway, although energy prices have cooled off. This entire pocket, do you stay away completely? And which are the segments or which are the stock sectors that could be affected even henceforth?
So, I mean, I don't know whether you stay away from it, completely or at one point in time, but specifically to autos, I would say that, the domestic focused auto plays are probably better off. And I would say follow the market share. And I think those two themes have kind of tended to protect investors over the last couple of years, and I think that will continue. Overall, I continue to be fairly cautious on autos because, as supply resumes, or rather the semiconductor shortage issues get put behind us, and as demand slows down, you'll probably see an expansion on discounts. So that's something that worries me in autos. So personally, I would stay out of auto. So your question is, where does one go? I think, it's time for the boring. Look for dividend yield. I'm reasonably optimistic that the utilities will actually not lose you a lot of money, and you at least make the dividend yield and a little bit more as you go further into the year. Telecom is another area where, I'm a little more constructive, simply because I think the pricing is holding up. And as 5G rolls out, that will give another leg up to pricing. And I also think that, the discussion that the regulator is having about OTT having to share some of the revenue with telecom companies will be a nice support. I don't know how big that can get. It's anybody's guess. But something is better than nothing, I would say.
All right, Ashwini, when you talk about dividend yield, a lot of these government companies come to mind, PSUs, and they get a bit of a discount. Do they provide some solace in this sort of a market? Will you look to hide in them? Because they are, big dividend yields expected. A lot of all these names, NMDC, NTPC, Power Grid, Coal India, name it, they get a lower multiple, but dividend yield is likely to continue out there. Your take?
Yeah, I think, where you see a significant dividend yield of the order of 6, 7, 8%, I think we should take a look at it because sentiment is short. And dividend yield is always a nice way to protect the downside, which is what I would look to do in a challenging year like 2023. And the PSUs obviously have a dividend yield as a very good support. And some of the stocks have come down a lot, whether it's in the financial space or whether it's in oil and gas or in the utility space. I would obviously be a little careful where there is a significant policy risk of something going wrong. But where I don't see a policy issue and where I see the macro challenges to be somewhat manageable, I would gravitate towards them, especially in the utilities area and maybe some of the financials. Those look relatively more attractive. But across the board, I think dividend yield is a good theme to play.
So the market's still holding with gains, 92 points. And maybe a good time to look at a few names which are doing very well. Adani Enterprises is still the top volume-led gainer, 5.5% higher. Adani Transmission has got a 4% pop on strong volumes as well. Yes Bank is the number 2 volume-traded name, 5% higher on Yes Bank. Hindalco is bouncing to almost 3% actually, 410. Varun Beverages comes up with strong volumes, 3.33% higher. Adani Wilmar, after yesterday's 5, another 5 on the upside, 370, 380, actually 379, 380. SRF is up 2.5%. Again, strong volumes on SRF. I can spot Nykaa, which is up about 3.25% at 144, 145. Jindal Steel is up about 3%. I think the China PMI numbers, which came in earlier today, they've been a beat. Perhaps providing some fillip to the metal stocks, both ferrous, non-ferrous, etc. But that's the big volume part of the market, which I'm highlighting. So far, so good. 90 points is what we have on these names. Ashwini, many viewers ask, if you had to get exposure to one sort of new age company, which one would it be? All are broadly down very, very sharply, right? The degrees vary, not by that much though. What would it be, in your opinion? What do you like in that space?
So Prashant, when I was last on your show about a month and a half ago or so, I said that, look, a lot of these prices have corrected and I'm tempted to take a look at them, and I will take a look at them, and I did. Okay, but I still find valuations quite stretched across the board. Notwithstanding the fact that these stocks are down, whatever, between 50 and 80%, from their all-time highs, I still think that the optimism regarding, valuations is still on the higher side. The businesses are all good. Okay, so, I don't want to take any names for obvious reasons. But a lot of these platform businesses are great. But we are still being asked by the market to pay up too much for them. In a rising rate environment and in an environment where growth is going to slow down, I want to seek downside protection in dividend yield. I want to seek downside protection in not just the price movement from all-time highs or 52-week highs, but also in terms of valuations. I think market's not going to go anywhere. So in this environment, I don't want to risk being undisciplined or indisciplined about valuation. So that's my net take. New age companies, I'm still staying away.
Okay, staying away from new age companies. We'll take that. Thanks a lot, Ashwini, for joining in. And have a great weekend, have a great week, have a great year. We'll, of course, speak to you very soon. But thank you for your thoughts on the market. All appreciate it as